Hey everybody and welcome back to Crypto Kings. My name is Matt and in today's video I'm going to be talking about what's going on right now with Shiba Inu. I know a ton of you guys have been asking me and I want to get into it. So if you guys are new, make sure to drop a like and subscribe for more daily SHIB vids. Let's get right into it, folks. So if you guys haven't seen what has been happening here over the past few hours, essentially this has been a rather scary quick little flash crash for SHIB. Now, I personally do not believe that this is going to be a major continuous problem because of what we are seeing finally on screen. So what you guys can see here from the graph is extremely interesting. But before we get to that, you guys have to note, of course, that on the day we are still down a good deal. And of course, you guys see we are down 10.5%, which is bad. Generally, I was hoping we would stay above 60 the entire time. I was hoping we wouldn't even have to retest 60. Unfortunately, at a couple points, we did dip down all the way to 53 and 52-ish, which is absolutely awful. So our goal is to avoid that by any and all means. When it comes to market cap, guys, we are down again, $32 billion market cap, which is, to say the least, not very hot. We are now number 11 on the list, which places us behind USDC, of course, and Dogecoin. So definitely a big contrast from the 40 billion market cap we were sitting at just a couple of days ago. You guys can see in terms of volume, we were at almost $8 billion worth of volume, which normally would be good. That would be an appropriate volume to market cap ratio, but that volume is mostly sell volume, so that is definitely not hot. When it comes down to the graph, guys, there are a lot of things to look at here, but we're going to go over some bullish and some bearish elements that I am seeing. So the first thing, the elephant in the room, the bearish scenario, is of course the fact that we went all the way from really a high of 66-ish all the way down to 52, which is literally terrifying. I know a lot of people were upset about that, but there is a silver lining. So we have this very sharp drop here, but take a look at what happens after. We get some very nice green candles going all the way from 54 up to around 60, which is not bad. And again, this new candle is looking to be green as well. So we do have some silver lining on this, of course, and this could be a matter of a few scenarios. So there is a scenario, of course, in which we have obviously an overarching kind of line of resistance from the very top here, from the 88-ish area here, headed all the way down here. And this line is essentially going to be what is preventing us from breaking out. But then, of course, we have the triple bottom. So you guys can see we have one bottom here, then, of course, one bottom here, then, of course, one bottom here. And it's slightly lopsided. This bottom is a little bit lower than perhaps it should be, but in general, it still follows this triple bottom kind of structure. And this is what we've been talking about recently on the channel. So whenever there's a triple bottom like this, there will typically be kind of like a neck that you have to kind of pass through, and that is this line in this instance. So the idea here is that when we have a triple bottom like this, we obviously have three very low dips. And of course, you guys can see it happens the first time over here. We'll encapsulate both of these candles because it really is kind of one and the same. Then we have obviously one over here, and then the one that is happening right now. So what we want to do, of course, is after the third, branch out and have a bullish movement, which is still very, very possible. So we could branch out here and have a very bullish movement. These candles could continue. They could break through, kind of an overarching theme of resistance here coming down. We could break through and continue to have some awesome bullish action here. This is a possible scenario. Is it the most likely scenario? I would say no, but it is still possible. Then, of course, we have another scenario in which things just level off and consolidate between 65-ish and 55-ish. That is, I think, a reasonable guess, which, would not be any of those, wacky patterns or wedges or whatnot. But the idea here, of course, is that we have something in like the low 60s-ish and maybe 63, 64, something like this. And then, of course, we have a support line, which is sitting somewhere around 55, 56, something like this, and the next future candles just kind of fill it out. They just kind of fill out this line of consolidation, and then it eventually could bounce between here over and over until, after a week, a month, hard to really tell, we could see a breakout. So that is another scenario that comes to my mind. Then, of course, obviously, we have the bearish scenario in which, obviously, you guys can see we have these two rounded tops here. I'll show you guys one here, and then here is the second, and of course, this is not particularly good looking. This is typically very bearish, and that is obviously not very good. So that is what, the rounded tops look like in this scenario, and of course, that could lead to a long-term bearish action in the future. So I would definitely be aware of that. When it comes down to it, guys, with the RSI, you guys can see that here over on the screen right now, we are in the low 40s. So again, this sort of comeback candle here on the green is definitely nice. you guys can see we were considered oversold when we were down into the low 50s. So it is nice to see us kind of returning to normal right now. I would definitely say this is good, just not exactly where we would want to be. Ideally, we'd want to be pushing a little bit higher, getting to maybe 60-ish, something like that, just to be able to get ourselves back into the at least mid-60s, getting to 65 here on the chart, of course, or maybe 70. So that is still possible. That headroom does exist. It's just a matter of whether or not we will be able to achieve it. Of course, once you break out of the relative strength index, you do get very volatile, leading to the potential of a crash, and that is definitely what we don't want. Natural pullback is expected, but whenever it surges like you guys can see here, whenever it has an amazing surge like this, it kind of does have a crash following suit. So that is definitely something to be aware of. When you guys check the Fibonacci retracement, of course, this is the auto fib. You guys see we're going to check obviously the highest and the lowest of the most recent run that it has charted here. So we have the very top here at 72 and then the very bottom here at 52. So this is very recently done, this information here. And the goal, of course, is to in some way, shape, or form get an idea of what our challenges will be and what our supports will be. So we have the 23.6% line here, which you guys can see, of course, on screen is sort of the sort of main contender right now for line of support, and I think everybody would be okay with this. A line of support in the mid 57s I think is fine. I don't think people are losing sleep over that. It's watching it barreling down to, almost the 40s, I think that gets people worrying. So if this becomes the new line of support, and again, the Fibonacci retracement always gives us that opportunity to have these new lines of support form, we could watch it just bounce off this, routinely, and this would not be particularly tragic, and we could work our way back into the 60s, of course. Now, the main challenger here, the main line of resistance that is going to be extremely hard, in my opinion, to get through, obviously, is the 78.6% line, which you guys can see is being covered up by these candles here, but the 78.6% line here at the very top, this is where a lot of the action took place. A lot of the 70s kind of hung out here for a couple of days. So if there is some circumstance in which we get some candles that could get us up here, staying up here, I think would be definitely very tough, but very rewarding if possible. That could definitely be another outcome if done properly. Then, of course, obviously, we have the final thing to look at, which is, of course, what shape this is actually making. And, there is a lot of debate over what shape this actually is. But really, guys, what it comes down to looks to me like a falling wedge. And again, you guys can see we have, these tops here that are going down, of course. We have the bottoms here that are kind of going down as well. Again, it's hard. They really, kind of should be more like converging in this sense. Like if we are to draw our lines here, this should be something more kind of like this. It's a little tough to get an idea of whether or not, this is really going to play out because they're not filling out this wedge quite as well as they should. Then you have, of course, the other scenario, which is the symmetrical wedge, where you have increasing lows and decreasing highs, and that is always a bullish movement. But again, you answer the same issue, what the heck is this hanging outside here? You know what I mean? So this definitely becomes a little bit more difficult to chart with time, but I still think persistence will prevail. So with that being said, guys, thank you all so much for watching. I hope you guys have enjoyed. If you guys did, make sure to drop a like and subscribe for more daily SHIB vids. Let me know down below in the comments where you guys think Shiba Inu will be in a week from now. Again, I definitely don't think things are as bad as they look. So thank you so much for watching. My name is Matt. See you guys on the next one. Peace.